Here is the first stock that we're going to go over. Hogan, Surf Dance, and Hogan is looking at BAM. All right, so BAM, it broke above the point of control, was bullish, used it as a nice support, barely made it to the 200-day moving average, and then rolled over. Now that we're under the point of control, this one is actually looking more of a short to 42, which is the 50-day moving average. Big Trade Jim is looking at Disney. Disney is the same scenario here. We broke below the point of control. I'd be using this as a resistance. We also have the 21-day moving average as a confluence area as resistance. This is going to be a very hard area to get over. And also in bearish territory was the QQQ. This is the chart highlight. We were crazy trading the QQQ on Friday on Trade the Close, and we had a mega bombshell bear. And if anyone traded that, let us know in the chat, because that was extremely exciting. Market just continued to take a dump after 3 o'clock. And my infamous sexy indicator was telling us to be short, and it followed up with a giant bombshell bear that we made some moolah on. I know Eric definitely did. He was in the chat and in the room trading that bombshell bear to the downside. We're going to bring on Mark Sebastian back. Hello, Mark.
What's up? Good morning.
What's up? Hey, Mark.
Hey.
Yeah, talk to me, Goose.
Yeah, Disney's kind of an interesting one. It like appears to be consolidating. Near term, I can see you're right. Long term, I still think it's an interesting put sale. Plus, we know their P&L is going to be way higher because Garrett's there just dropping coin left and right now. So I'm expecting a huge earnings beat based on this week. Brooke, I've never looked at BAM before, so let's talk the Qs. What levels do you have for today? Because I think today's a really interesting one. Because the selling on Friday was absolutely that last 15 minutes of the day. It was incredible. I know you were watching the Qs, but I was watching the S&Ps. The S&Ps broke 39.50, and then we flushed. That is exactly what happened. You can actually watch 39.52, which has been the previous day's point of control, because you and I had been talking about that.
Mm-hmm.
And we broke that on the S&P futures, and then it took everything down with it. And so I think that you're probably going to see things play out a little bit the same today. We've had a nice run. I would not be surprised to see us pull back a little bit. I don't really have a great trade that punched me in the face. I'm not going to force one on people. But what I will say is, I think that there's some money to be made being short today.
Okay, so Mark is looking for some money. You're looking for a little bit of a more of a sell-off today here. Mark, we have just been battling it out again. And it's been tricky because we're battling it out right here on the point of control. I too am leaning back on this one. I want to see, we need traders to figure out if it's going to hold the point of control as support, or if we're going to break the point of control. And it's going to happen this week, because we're going to have some fast and furious action with CPI and with the Fed as well.
This is a crazy week, Vaz. All right.
Yeah.
We have CPI, we have the Federal Reserve, and it's quadruple witching, which means we're going to have a complete liquidity suck leading into Thursday and Friday. All right. Woo! So this is going to be, if there's a week for the market to move, all right, I'm not kidding you. It is this week. This is going to be, I think, this could potentially be one of the biggest weeks of the year with everything going on. So it could be a fun one.
Sean and CJ were even saying whatever happens this week can determine where we're going to go for the rest of the year, which which is exciting, because once the market makes up its mind, there's loads of money to be made on the upside or the downside. Because again, once it breaks that area, the point of control, you can confidently be long or short for a longer duration. Now, Mark, let's stick with you. Like you said, there's going to be some major action, a liquidity suck, if you will. Let's get into your VIX forecast. What are you seeing?
Yeah, we continue to see the VIX sit on top of each other. The light remains yellow. We saw volatility, VVIX get bid up a little bit into yesterday. the VIX curve is in contango, but it is really on top of itself. VIX futures don't expire for another week and a half, so that December future expires on the 21st, and it is trading essentially right on top. And January is trading at a huge premium, which tells me they're still worried about some sort of shoe dropping here. I look at volatility and the way the curve is set up, and it's still pricing in some pretty strong moves. And you know, when you look at where the VIX is 2283, that's pricing in more than 1.5% of movement every day. The realized vol has not been there, which means the realized vol in SPX is, oh, whoops, I didn't want VX, I wanted SPX. The realized vol in SPX over the last 10 days has been around, 10-day 22, so right there, and 20-day about 17. So they're looking, I think, for some sort of breakout move here. The realized volatility doesn't mean we actually move 1.5% a day. We can get a couple of days in there where we don't do very much, but then we get a 3%, a 4% day, like we've seen, and that gets that realized volatility to that level. And that's what I think they're pricing in. They're still looking for, I think, some breakouts.
All right, so this isn't that calm then. You're saying that this is implying some big moves.
Yeah, I think we're right at a crossroads, and January, with how much timed expiration we have, should not be trading that far above where the cash index is and that high above December. The trade is long D, short Jan. As buy calls in December, sell buy puts in January, and get long the time spread, because which I know is, there are not many people here that are likely trading volatility futures and to take advantage of this stuff. But what I'm telling you is that what that means is essentially this is not the time to be selling short-dated options. All right, it's not priced that way.
Okay.
Longer dated stuff maybe makes some sense, but short-dated stuff, no.
Okay, longer, yes. Short-dated, no. You're also cruising. You're also cruising with some big money flow. What caught your eye this week?
I wanted to look at CCL, and this is another one we had a big put buy. The January 2025 4 puts for 34 cents. And this is not as bearish as you think. This is a bondholder putting on a hedge. I know we keep coming back to bonds, but that's
again,
what this
I'm
is.
telling you that.
But I know, it's Bond
show.
Monday.
It's Bond Monday.
Yeah, but there's an important point here, though. The reason why bondholders are hedging themselves is because they're worried, and we've seen this type of paper in CCL for a long time. It's had a nice rally, but I think that there is some real worries there that whether it's able to continue as a going concern. And you should see, if Carvana is truly going to go out of business, you'll see that type of paper start to show up in some of its way out of the money paper. We've seen that happen in AAL, and you should start seeing some of that in Coinbase. I'm actually quite surprised we have not seen any of that in Coinbase, because of where the debt is trading relative to the dollar, or relative to yeah.
I believe recently they had a $1 billion. They took out $1 billion debt. A convertible debt offering. $1 billion. So I would be a little concerned as well, because that's a pretty big a bet here for being a recreational company sailing into a recession. So I understand why there would be that kind of worry with that. Are you looking to take
and Carnival loves doing that to their investors. Anytime they can get a chance, anytime the stock rallies, if they can screw over their equity holders by issuing more equity or convertible debt, they will do it. This is just every time. If you're a long-term holder of Carnival Cruise Line, every time the stock starts to look up, they just come in and crush you, because the management is truly interested in paying themselves and not returning shareholder wealth. Just remember that.
Ouch. Oh my God. It's almost ringing to the tune of AMC like. Are you
Mhm.
going to take advantage of this flow? I mean, like you said, it's kind of a mixed
You
flow
know,
here.
it's
It's not
seen some
as
year.
bad.
There's been some near dated bear paper in there as well. The next time
Ooh.
I see something that comes in, so like last week, somebody came in and bought the 8.5, 7.5 put spread, and Carnival dropped like a stone. Next time I see that type of paper, I'm going to hop on board on a short trade. Yes.